Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. With me, as always, is Ankita Saxena. This is a show where we'll be taking you through all the big buzzers in today's trade, tell you why these stocks are in focus today, either on the back of their quarter four earnings or individual upgrades or brokerage notes coming in, and we'll also bring on the technical expert to give you a tech check on some of these stocks. But before we do that, let's take a look at what the market is shaping up to be, and it's absolutely been a still market today. It's been lackluster and largely rain bound because we are still under the 23,400 mark on the Nifty, Ankita.
Absolutely, Snehi. It's a lackluster day coming in. In fact, after the rally that we saw, in the last few weeks, that seems to have been taking a breather now. Nifty is not managing to cross the 24,400 levels. We are trading, we are hovering around the day's lowest point on the Nifty. We are perched at 24,391 is where we are at. Nifty Bank ditto. In fact, Nifty Bank, this is the 7th consecutive session where Nifty Bank is seeing a drawdown. Nifty Bank is also trading, hovering around the day's lowest point, and there is no recovery coming in on Nifty Bank as well, especially the PSU pack that's reeling under a lot of selling pressure right now. PSB, Union Bank, Bank of India, Central Bank, IOB, they are all trading with cuts of upwards of 3% odd. So PSB Bank is one sector that is reeling under a lot of selling pressure. But on the winning side, we have the auto pack that's in the fast lane. The auto pack and even the defensives, FMCG were doing well before it turned, to red. It was trading in the green. It is in the red, albeit very, very marginally right now. But auto is doing very well. Hero Motor, M&M, Exide, Balakrishna Industries, Eicher Motors, Bajaj Auto, all of these are trading upwards of 1.5% right now. FMCG is also, like I mentioned, a pack that was doing well. United Spirits is doing well. That is trading with gains of 1.2%. HUL, Nestle, these are the nifty gainers as well. They are trading with gains of 1%. Britannia also trading up 0.5%. But besides that, Nifty Realty, Energy and the mid-cap space, that is seeing a lot of selling pressure come in. The mid-cap space is reeling under pressure with cuts of more than 1.5%. Nifty Small Cap also trading with cuts of 1.6%. So right now we are seeing, actually we are hitting the lowest point of the day on all accounts as far as the benchmarks are concerned. The banking pack is concerned, and also the broader market is hovering around the day's low right now. So that's how largely the market is shaping up. Advanced decline ratio is tilted in the favor of decline. So a somber day is coming in on the cards for this trading session.
Looks absolutely somber even in the broader market that's taking a steeper hit compared to the benchmarks. But on that note, let's welcome Kunal Parar, Vice President Technical Research and Algo at Choice Equity Broking, who's joining us on the show for the technicals. And from our in-house research team, we have Gaurav as well as Ravinda joining us. It's a full house in the studio today. And on that note, let me kickstart the first stock that is in focus today. That's Godrej Agrovet. The stock has seen a sharp run up amid a market that's largely sideways today, and this is on the back of a Kotak institutional note coming in, wherein they have upgraded the rating on Godrej Agrovet to buy from add earlier, and also hike the target price to 870 from 840 rupees earlier, after what they consider an unwarranted sell-off in the stock following its quarter four earnings that were subdued, but largely that was also along expected lines, and that was also a seasonally slow quarter. The outlook for FY26 remains positive, and measures to simplify the holding structure could also help the stock going ahead. On the earnings call, management had guided for 16 to 18% growth in revenue and earnings for FY26. Key earnings growth drivers for the year ahead will likely be a partial turnaround at Aztec, a double-digit revenue growth along with margin expansion in dairy, and strong volume growth also coming in. Aztec CDMO business is projected to clock a CAGR of roughly 35% for the next couple of years, and management aims at 20% plus EBITDA for the next 3 to 4 years. The risk-reward ratio also seems favorable for current situations. That's what Kotak is highlighting in their note. Very positive note coming in, sharp upgrade in terms of rating and target price, stock up almost 5.5% as well.
Alright, moving on from Godrej Agrovet to United Spirits, another counter that is doing well today from the FMCG pack. Tell us, Kunal, what do you see in the charts for United Spirits? In the last 1 month, it has run up 12%. Do you see the positive momentum to continue from here on?
Well, definitely the way stock has been trading on its daily chart, I think we may see a further upside momentum in the counter. Right now, stock is trading at 1578, and it is trying to give a breakout of its intermediate top, which was placed at 1575. So, we will see a further upside momentum in the United Spirits in upcoming trading session. One can get into the stock at present level. If we talk about SL side, then downside strong support comes at 1520. And if you talk about upper side, then the way stock has been trading on its daily chart, we have already witnessed breakout. So based on this breakout, first target would be at 1625, and if it breaks this breakout, then further upside would be there up to the level of 1700. So definitely United Spirits looks very attractive as per the daily and weekly chart.
Moving on then from United Spirits to the next counter that is in focus today, and that is Cummins. Now, Cummins India share dropped 7% after its parent company withdrew its full year guidance owing to tariff measures imposed by the US President Donald Trump. Also, Cummins CEO Jennifer Rumsey announced that the company is withdrawing its full year forecast because of the economic uncertainty caused by the tariffs. Now, Cummins had previously projected an overall revenue growth to range from a 2% decline to a 3% increase. At the parent company level, power gen revenues were expected to rise between 5% and 15%. And for the Indian market, the company had anticipated a 10% revenue growth, which also accounted for its unlisted joint ventures. Now, all previous guidance has now been withdrawn due to the uncertainty created by the US President Donald Trump's trade war. On the back of that, Cummins India seeing a decline of 7% in the early trade, has ticked up from there, but is now trading with cuts of 4.4%.
Okay, Cummins India under deep pressure after global parent withdraws their guidance. But Kunal, coming to you, Chambal Fertilizers is the stock that you've picked out for us. When I take up the charts, when I see it, and 6 months, the stock has seen a 42% uptick in the last 6 months itself. Year to date also very healthy moves. Last 1 year itself, this has seen a 78% move, and now on top of that, we're seeing more gains building. Is this a case of too much too soon for Chambal Fertilizers, or do you think this rally is sustainable on the charts going ahead as well?
Yes, definitely the rally is sustainable, and we may see a further march towards the upper level in the counter. The way stock has been trading in its upward rising channel formation, stock has already been trading in its uncharted territory with positive volume. So the positive rhythm is there in the counter. Not only this, if we talk about the MOM theory, momentum theory, if we look after the monthly and weekly chart, momentum theory works very well on the stock. So definitely, even on a smaller time frame, stock has even a breakout of its flag. So multiple equations are there which is favoring for creating long position in the counter. So one can get into the stock at present level. Right now, stock is trading at 715 level. And if we talk about SL side and the downside, strong support comes 680. So we will keep 680 as our SL part. If we talk about target size, then first target comes at 745. And if stock breaks this level, then further upside would be there up to the level of 785. So we can expect somewhere around 9 to 10% of return from this counter. So yes, definitely one can get into the stock with strict stop loss of 680.
Alright, that's Chambal Fertilizers on the chart. But moving on to the pharma sector, Abhinda, you picked out the entire pharma sector for us. Tell us what's the news flow here, a negative news flow coming in from US. Tell us what it is.
Well, yes, entire pharma sector is in focus where President Donald Trump signed an executive order for prescription drug manufacturing in the US, streamlining the path for pharmaceutical companies to build new production sites as potential tariff on imported medicine loom. The order directs the Food and Drug Administration to reduce the amount of time it takes to approve manufacturing plant in US by eliminating unnecessary requirement, and President Trump also directed the agency to raise inspection fees for foreign manufacturing plant, improve the enforcement of active ingredients sourcing reporting by overseas producer, and consider publicly listing facility that don't comply. So back of this entire pharma space is in focus.
Okay, that's the reason why pharma stocks are in focus in today's trading session. Let's move on from that. And Kunal, coming to you for Tata Steel. If you take a look at this stock, last 6 months, last 1 year, a negative return is what it has given. However, last 1 month, the stock is up a good 10-11%. Tell us if this recovery is here to stay and what are the next levels that you're spotting.
I think we may see a further upside momentum in the counter because rally is sustainable. Even stock has also taken the support of its previous bottom. Not only this, where stock has been trading on its weekly chart, stock has already taken the support of its 20 and 50 weeks MA. So long-term trend is up only in the counter, and even if you talk about smaller time frame, stock is giving a breakout of its flag formation on a smaller time frame. So all the equations are suggesting to go for long only in this counter. Right now, stock is trading at 144. One can get into the stock at present level. Downside strong support comes at 138. So we will keep 137 as a SL. And if you talk about target size, the first target comes at 150, and if stock breaks this level, then further upside would be there up to the level of 160. So again, we can expect somewhere around 9 to 10% of return from this counter.
Alright, moving on from Tata Steel to another name that's doing well in trade, and that's Bajaj Consumers. That's trading upwards of 3% odd. An earnings candidate, Gaurav, take us through what does the report card look like?
Well, yes, yesterday we saw a company came up with good set of numbers. Expected numbers were actually, numbers were actually in line with the street was expecting, but EBITDA margin was something which actually came up as a surprise. When we talk about EBITDA, the guidance has been improved almost to 16 to 18% versus what is in this quarter, and that was actually something which is pushing the stock upwards today. What has happened is that from management they are also saying is that with price hike and inflation moderation which are expected, the company is going to expect the value added hair oil products likely to see gradual recovery. And after that we also saw brokerages being a little bullish. So we have got Nuvama who said that both gross margin and EBITDA margins have improved, and that is the reason which actually remains one of the positive things. Other than that, what they are also highlighting is that the market share is now stands at around 2.2%, which has inched up almost a 60 basis point in Maharashtra, which is the largest market for coconut oil. So definitely a positive momentum is what we saw from the results apart from numbers, and as a result we are seeing some positive uptick also. So on the back of this we are watching out on this stock.
Okay, Bajaj Consumer looking healthy today, almost a 4% uptick coming in. But on that note, viewers, time for a short breather on the edition of Market Fatafat, and we'll keep it going with more stocks on the other side when we return. So you stay tuned. Welcome back. You're tuned into Market Fatafat, where we are getting you all the buzzes in trade, either on the back of news flow or on the back of technical charts. But before we resume with all the stocks, let's go across to an ET Now exclusive, where Scott Poonawalla is in joint venture between Scott Pharma and Serum Institute is set to get a shot in the arm. PE investor TPG has picked 35% stake in the joint venture. My colleague Anurag Joshi is joining in with the details of that. Over to you, Anurag.
Private equity investor TPG is acquiring a 35% equity stake in Scott Poonawalla. Scott Poonawalla is a joint venture of Scott Pharma and Serum Institute of India, which is controlled by the Cyrus Poonawalla Group. TPG Growth, which is a middle market and growth equity platform of TPG, is funding the investment, and joining TPG in the transaction is Novo Holdings as a co-investor. Following the deal's close, Serum Institute of India will retain a minority stake of 15% in Scott Poonawalla. Scott Pharma will own a 50% equity stake in the company. Scott Poonawalla designs advanced drug containment and delivery solutions, and the company's portfolio includes cartridges, pre-fillable syringes, vials and ampoules. It also provides CDMO services to customers.
Okay, so that's the exclusive coming in on Scott Poonawalla and the stake acquisition over there. We'll keep you updated as and when the story develops, but let's move on from that and talk about a stock in focus today. That's Indian Hotels on the back of its quarter four earnings. Now, quarter four earnings were largely in line with estimates, but the stock has seen an adverse reaction. Maybe that's the reason of profit booking that we're seeing in the stock today. It's lower by 5.5%. Let's take you through the earnings fine print. Revenue has come in at 2,425 crores, which is an uptick of 27.3% year on year. Net profit has come in at 522 crores, up 25% year on year. EBITDA has seen a growth of almost 30% year on year. EBITDA margins have also expanded quite sharply at 35.3% compared to 34.6% on a year on year basis. The new verticals, the likes of ginger, cumin, AMA stays, the revenue over there has also gone up by 40% on a year on year basis. SATS has posted a 17% year on year growth as well. If you take a look at quarter four highlights, the ARR is up 15%, RevPAR has also seen a growth of 16%, occupancy across portfolio looking good at 80%, and in quarter four they've had 19 signings and 6 new openings. Their outlook for FY26, that's important to watch out for. They are all set to invest 1,200 crores in capex, and they have said that they are poised to continue double-digit revenue growth that has been maintained. They are also eyeing 30 new hotel openings, and FY30 outlooks is also maintained. Motilal Oswal reiterated a buy call, target price of 940, anti-retain hold, target price of 750 rupees per share. So it's a knee-jerk reaction that the street has seen to the earnings. Earnings were rather in line, but this seems to be a little profit booking that the stock is seeing right now.
Right, and we also had Puneet Chitwal, Managing Director and Chief Executive Officer of Indian Hotels, who told us that he is seeing 15 to 17% growth in the month of May, and he also aims to maintain margins at high levels. Let's go across and listen to what he had to say post the results.
we did 17% higher top line versus April of last year. And the number looks similar for the month of May going forward, maybe not 17, maybe it will be 14 or 15. This is a very healthy growth. We are very well positioned with the cash position and without any debt to participate in such opportunities. This year we have promised 30 new hotels opening. Hopefully we deliver 33 or 34. So I think if we keep doing that and on top of that we get an opportunity of some form of consolidation, we would have a very high growth in the company.
Okay, so that was IHCL's Puneet Chatwal in conversation with Nikunj Dalmia. But let's move away from that. Kunal, you've picked out Bharti Airtel for us on the charts, a stock that has been a consistent compounder over, let's say, the last 1 year, 6 months. It's been steady in terms of the kind of returns it has given. So no complaints on that front. But what are the next levels you're spotting? And do you believe that this shade of green that we've been seeing for quite some time on the stock now can also last going ahead?
Well, yes, we have been witnessing very good upside momentum in the counter since last many days, and not only this stock has been in its uncharted territory. I think this is the stock among the Nifty 50 stocks who have delivered very good return to our viewers and our investors. Right now trading at 1899, and we may see a further upside momentum in the counter from the present level, because stock has been trading above all its long-term moving averages. Not only this, continuous demand is there for this stock. So demand supply ratio even talk about the further upside momentum in the counters. Right now stock is trading at 1899. One can get into the stock at present level with SL of 1800. No doubt SL is at a bit lower level, but nothing to worry about this counter, because fundamentally this stock looks very attractive. If you talk about target size, the first target comes at 1975, and if stock breaks this level, then further upside would be there, and stock may march toward the levels of 2100. So again, we can expect somewhere around 10 to 11% of return from this counter from the present level.
Alright, that's Bharti Airtel on the charts. But moving to the next counter, which is an earnings candidate and is not doing well in trade, is Z Entertainment. Now Z, the company has seen net losses for the fourth quarter as widened 464% to 36 crore compared to on a year-on-year basis, compared to 6.5 crore in the same period a year ago. And the company's revenue from operation also dropped 13% to 155 crores in the quarter, compared to 178 crores in the same quarter a year ago. Now the group has incurred a loss of 11,942 lakh during the year ended 31st March 2025, and the working capital stands negative as at that date. Now, to address the same, the group has been taking various steps, including cost rationalization measures, and has obtained credit period extension to discharge some of its contractual obligations, according to the exchange filing. On the back of a weak set of quarter 4 results coming in, Z Entertainment is reading under pressure. It cuts off almost 1.5%.
Okay, Z Entertainment too in pressure today in the Kunal, coming to you, Blue Star is a stock that you've picked out for us. Interesting recent history of the chart. Last 1 year, the stock did pretty okay, up 20%. YTD itself, the stock is lower by 24%, erasing all of those gains. Tell us what's the outlook going ahead, because volatility is something that we've seen in the stock. Today, the stock is holding up well ahead of its quarter 4 earnings tomorrow, but what's the outlook on the charts?
Well, outlook for this counter is positive as of now, because stock has been trading with its strong support, which is placed at 1652. Even before stock took the support of the same level, and afterwards it went up to the level of 2200. And if you talk about candlesticks formation wise, that during yesterday's trading session, bullish reversal formation was there on the daily chart, so we can expect some bullish reversal momentum on the counter. Not only this, if we talk about weekly chart, monthly chart, stock has been trading above all its long-term moving averages, so long-term trend is up only. So this is the perfect time to get into the stock, because right now stock is trading in minor correction, while primary trend is on upside only. Right now stock is trading at 1724. Downside, strong support comes at 1630. If we talk about target size, the way stock has been trading, I think first target would be at 1800, and if stock breaks this level, then further upside would be there up to the level of 1920. So 11 to 12% of return that we can expect from this counter. One should get into the stock with strict stop loss of 1630.
All right, that's Blue Star on the charts. But coming to you, Ravinder, next for an earnings candidate, a weak set of results coming in for CAMS. Tell us what does the result look like?
Elias CAMS reported a weak quarter with revenue declining to 3.7% quarter-on-quarter basis to rupees 356 crore from 370 crore, and the company EBIT fell to almost 11% on a sequential basis to rupees 137 crore, while PAT down by 9.1% on quarter-on-quarter to rupees 113 crore. And if we talk about EBIT margin, then the company's EBIT margin also contracted by more than 300 basis points and coming at 38.3% compared to 41.5% on a year-on-year basis. So back of the weak Q4 number, stock is down over 4%.
Okay, so that's CAMS, a weak quarter 4, stock is down 4%. Gaurav, coming to you, Hero Motors is the stock that you've taken for us. Tell us why this stock is in highlight today.
Hero Motors is in focus, and the reason being that Ather Industries has now listed. Let's not forget that the IPO closed on 30th of April, and when we look at the IPO, around 2,981 crore rupees is what the company has gathered through this IPO, out of which around 2,626 crore is a fresh issue from the company. Now when we look at the IPO, we have already seen that the IPO subscription went as high as 1.43 times, with QIB investors and retail investors being a dominant players in this IPO. Other than that, when we talk about some of the other investors, specifically the marquee names, we have got the name the likes of State Bank of India, Abu Dhabi Investment, Investco, ICICI Pru Life, who all invested in the IPO. Now, when we talk about Ather and when we talk about Hero, let's not forget that Hero owns around 37.2%, which is Ather's biggest stakeholders, and given that now the Ather's IPO has been successful, although it has gone down the pricing, but still there is a value unlocking, and as a result we are seeing some positive output in Hero MotoCorp's share as well. As we speak, the stock is up more than 3%, so definitely watching out on Hero on the back of this news flow.
Absolutely watching out for Hero Moto, but ED and CEO of Ather Energy, Tarun Mehta, also shared his outlook on the growth and the distribution. He says that the volume journey has just begun and will pace up here on. He also believes that the company's asset-light model will aid the growth. Let's go across and listen in.
At a volume of roughly about 10,000 units a month in FY24, we were trending at about minus 35, minus 36% EBITDA. We hit about 15,000 units a month in the last quarters, and just that 50% growth has already taken us to minus 20 to minus 23% EBITDA. And I believe we're really just scratching the volume journey for us in this industry. So we believe volume for the industry, and obviously ours will trend very fast. On distribution, Ather had 260 stores pan-India in December. Our peers have been at between 700, 800, even 1,000 stores in some cases. All those stores many of those stores are in cities where Ather has not even opened its first distribution. Now, as we start unlocking that with our asset-light dealership model, we are very bullish on driving an incredible growth.
Okay, so Hero in focus on the back of a rival listing on D Street today. But Kunal, take us through what you are spotting for Hero MotoCorp on the charts. What are the next levels that one should be watching out for?
Well, if you talk about Hero MotoCorp, the way stock has been trading, I think we may see a very good upside momentum in this counter. This stock has already formed its bottom formation. Not only this stock has already taken the support of its previous bottom, which was placed at 3,510. If you talk about previous bottom, stock took the support of the 7. Afterwards, it went up to the level of 4,650. So we can expect the same replicate momentum in the counter. Not only this hammer candlesticks formation is there, and in our early chart, stock has been trading above its 20 and 50 MA. So if you talk about all the equation goes in favor for creating long position only in the counter. Right now, stock is trading at 3,896. We will keep SL at recent bottom, which is placed at 3,720. And if you talk about target size, the way stock has been trading, I think first target would be at 4,035. And if stock breaks this level, then further march would be there up to the level of 4,275. So 9 to 10% of return again we can expect from this Hero MotoCorp.
Alright, that is Hero MotoCorp on the charts. But moving on to the next counter, that's KKunal Technologies, the shares for which surged as much as almost 1.5% in early session today, after the company announced a 100% acquisition of the Caresoft Global Engineering Solution for a consideration of 1,600 crore rupees. Now, Caresoft Global is a leader in automotive benchmarking and cost reduction oriented engineering solutions that will restructure their business into benchmarking and engineering solution businesses. Now, KPIT will acquire the carved out Caresoft Engineering Solutions businesses globally, which is primarily focused off highway, truck and bus segments and manufacturing solutions. Now, KPIT will partner with Caresoft in their benchmarking business. And on the back of that, we did see an uptick coming in the morning, but currently it is trading towards the day's lowest point. It is reading under selling pressure now with cuts of 1.3%.
Right, before we slip into a break, just want to address the flashes on the bottom of the screen. You have numbers from Alembic Pharma that have come out. There's been a sharp cut coming in the margins on the back of that. A very sharp fall coming in the stock. Let's take a look at the numbers before we just slip into a short break. Revenue is up 16.7%. It's the net profit that has seen a 2.7% fall year on year. EBITDA on one side is up 4.6%, but EBITDA margins have contracted from 17.1% to 15.4% this time around. So that's a sharp cut coming in a few minutes ago when the numbers were announced, and 2% cut on Alembic Pharma as we speak. But on that note, we'll slip into a very short break on this edition of Market Fatafat and keep it going with more buzzes on the other side.
Indian markets are going to be getting a booster shot.
If you like this video, then like, share and subscribe to ET Now.